Have you ever heard of a term circuit breaker in the field of the stock market? In today's video, we're going to discuss what is circuit breakers and how does it put an impact on the market quality. Circuit breakers are used by exchanges across the globe for temporarily halting trading and resetting markets during periods of heightened volatility. Circuit breakers were first introduced by the New York Stock Exchange after the 1987 Black Monday crisis. Circuit breakers are commonly used for individual securities, as well as broad market indexes. Circuit breakers operate automatically by halting the trade when prices hit predefined levels in exchanges around the world. Various circuit breakers were triggered around different jurisdictions in March of 2020 due to COVID-19 induced volatility, due to which it reignited discussion among exchanges, regulators and market participants about the effectiveness of these mechanisms. The World Federation of Exchanges recently released research that focused on the efficiency of the four market-wide circuit breakers triggered in the United States during pandemic time in March 2020. The report suggests that these methods have a positive impression on market quality during periods of intense volatility. The research also concluded that MWCBs are linked with increased stock returns, lower trading costs, reduced selling pressure, and more informative prices. It also found that traders tend to hold back from making aggressive moves right before MWCBs are triggered. This holding back hypothesis challenges the magnet effect theory that circuit breakers cause more aggressive trading behaviour, which leads to more extreme price movements. Recently, ASX's General Manager of Market Operations, Ben Jackson, took part in a webinar hosted by the World Federation of Exchanges. Jackson and others shared their insights about the impact of circuit breakers on market quality, as well as other mechanisms used by exchanges to manage volatility. Jackson said that the research conducted by the World Federation of Exchanges clearly shows what a well-designed circuit breaker can achieve. On those occasions in March 2020, pausing the US market seemed to have two effects. Firstly, it seemed to relieve the pressure on the financial market, but then it also seemed to improve the market conditions after the trading halt. Jackson also noted that while circuit breakers are a useful tool for managing market volatility, they don't always work. Markets operate in different ways, which means their volatility control mechanisms need to be customised to their specific characteristics. Lastly, speaking about ASX, it does not use circuit breakers. Instead, the Australian Securities and Investments Commission uses a common set of market integrity rules for all securities and future markets in Australia. That's the latest here from Kalkine. For more info, take a look at the website kalkinemedia.com. I'm Rose Jacobs. Have a great day.